Hi, everyone. Welcome to CIIC's webinar where we're featuring Mercy Investment Services and Brian Piney, who's going to tell us the Sisters of Mercy impact journey. For those who don't know me, my name is Jessica Cook. I work for Ascension Investment Management. I have been a proud CIIC member since its inception about 5 years ago, and I'm very proud to be a steering committee member of CIIC. So before we start, I'd like to start with a reflection. I continuously try to remind myself that it's important to pause and be grateful for all the gifts that God has given me in life. So as we gather today, let's pay particular attention to God's many blessings upon us, especially those who so easily take for granted the course of our busy lives, the rapid, hectic pace of our lives, the multitude of activities that we're engaged in, the preoccupations of the moment and our planning for the future, the demands placed upon us, the demands that we're placing upon ourselves. All of this blurs our vision of what surrounds us and exists within us. So let's pause in silence briefly and be mindful of the abundant blessings that God has given us. So thank you again. CIIC's mission, through sharing our relatable experiences and learning, we expand impact investing among Catholic organizations. As part of our mission, we invite Catholic institutions to share their story and path taken to build an impact investing program. As many of you know already, CIIC recently introduced a Catholic Impact Investing Pledge, which is our continued effort to motivate the Catholic investment community to commit to taking meaningful and accountable steps to incorporate impact investments into their portfolio in alignment with Catholic social teachings. So it's my sincere pleasure to introduce one of our pledge partners and a dear friend of mine, Brian Piney. Brian's the Chief Investment Officer of Mercy Investment Services. Mercy Investment Services is the investment management program of the Sisters of Mercy of the Americas and its ministries, and is one of the largest Catholic impact investors in the world. Brian, we're very grateful that you'll be sharing the story of the Sisters of Mercy and their impact journey. I know I'm very excited to hear from you, and I think the community at large is going to learn a lot from you. So we thank you so much for participating. Everyone that's listening, thank you so much for participating. Don't be shy to email questions. There is a Q&A box at the bottom of your screen, so I encourage you. I'm going to make sure those questions are posed to Brian. And so without further ado, I'm just excited to hear from you, Brian, so I'm going to hand the screen over to the star of our show.
Thank you, Jessica. And good morning to all. On behalf of Mercy Investment Services, I am Brian Piney, the President and Chief Investment Officer. I'd like to thank CIIC for the opportunity to share our story. We've learned a lot from everyone else in the previous conversations and look forward to learning more from you all as we go ahead. Before we started, thought I would talk a little bit in terms of what is Mercy Investment Services. Our journey is relatively short in that we were just established in 2010. We are a ministry of the Sisters of Mercy, and theoretically we are kind of the family investment office for the investments of the Sisters of Mercy and any of their ministries that wish to participate. Regarding the Sisters of Mercy, it's an international community of Roman Catholic women. Approximately 2,500 sisters that we represent in North, Central, South America, the Caribbean, Guam, and the Philippines. There are similar groups such as our group of sisters that are global: Australia, New Zealand, Newfoundland, Ireland, and England. Basically, we were put together in 2010. Previously, the sisters had been running 20 some odd different investment portfolios and realized that the economies of scale that were being wasted. So we put together the program, brought 89 different investment managers under one roof, reduced our cost, increased diversification, improved governance and oversight, but most importantly, set up a system so we could promote systemic change and respond to the critical needs of our time. We have 4 pillars that we've created over time to create what we think is a very comprehensive socially responsible investment program. On the left-hand side, you see really it's divided into investment choices and active ownership. From the investment choices, it is your classic portfolio screens, the thou shalt not owns. starting with the recommendations from the Catholic Church and building upon those from the sisters' perspective. Impact investing, which is trying to select companies that are using best practices and investing in to achieve certain environmental and social impacts. Active ownership, voting all of our proxies, and engaging about 150 companies a year. Although the bottom left is labeled impact investing, and we'll talk about that a little bit here this afternoon, really we view all four of these pillars as impact investments, that they are being created and operating to serve the common good and promote systemic change. Within that impact investing perspective, so this is kind of the classic definition of impact investing as people talk about it. We work in both the concessionary and the market rate impact environment. We have created an organization called Mercy Partnership Fund. It's been in operations for long before Mercy Investment Services was in existence, and we brought it into focus within our organization when we were created in 2010. It really offers concessionary returns with high social impact, and we'll talk about that a little bit more here in a minute. In addition, back in 2015, we also started a program, Environmental Solutions Fund, which is more of a market rate investment strategy, specifically trying to address environmental issues and be a solution to the problems. Mercy Partnership Fund is a global community investment program, provides below market rate investments to approximately 60 mission-driven organizations that are creating positive social and environmental impacts through addressing largely underserved communities. And that could be in things like affordable housing, alternatives to payday loans, education and health services to underserved communities, renewable energy sources, training and financing to women to grow their own businesses. Operating in 50 states and in all 50 states and in 59 countries, benefiting about 12.5 million people. Lots and lots of stories we could tell on CIIC's website, www.catholicimpact.org. Our article talked about a few of those, Mercy Housing and Mercy Loan Fund, Azure Source Capital, Shared Interest, First Nations, and Solar and Energy Loan Fund. Thought rather than rehashing the same stories from the article, would share a couple more. From our standpoint, do some work with Calvert Impact Capital to increase clean energy access for women and disadvantaged communities internationally. Other groups may not be able to take those sorts of things and may say, well, how about can we do something with a CD, and have done some work with Clean Energy Credit Union, which is a credit union that provides loans to increase affordability to clean energy products and services. Groups like Friendship Bridge provides microloans and education to women in rural Guatemala. Michigan Women's Forward empowers women entrepreneurs through micro loans and group coaching and training. A group called Social Investment Manager Advisors provides off-grid solar energy and financial access to increase affordable clean energy to its beneficiaries. So lots and lots and lots of stories to tell from our website. Again, more than we can go into detail here, but feel free at www.mercyinvestmentservices.org to learn more about some of these programs that we're involved in. But really, any issue that an organization has in regards to its concerns, its desires, its goals under the mission of its organization, you can find something to participate in through groups such as the groups that we've talked about. The second part of it, from an impact investing standpoint, gets into the market rate side of things. And so Mercy Investment Services was admittedly a little bit slower to get into this, although we have a 25-year track record of the concessionary impact investing initiatives, working on all the types of things that we had talked about. On the impact side of things, we were a bit slower to get going. We created the fund in 2014 to invest in projects focused on renewable energy, energy and water efficiency, materials recycling, green buildings, and sustainable agriculture. To date, we've invested in a combination of 18 direct fund of funds and co-investment private equity type projects. Over the last few years, there's been an explosion in the number of these types of strategies. When you stop and think about renewable energy, smart energy, clean transportation, energy efficiency, water, agricultural efficiency, and other strategies such as this, they offer very attractive returns and really diversification and a differentiated source of value from other strategies in the portfolio. This is one of those that's got very, very strong trends, macro trends from electrification, decarbonization, and falling renewable energy prices. And it really provides the opportunity from where you can identify opportunities to both make money and do the right thing. And so the Mercy Investment Services has been involved in utility scale, commercial, distributive solar, wind, biomass, hydro projects, the US, Europe, and emerging markets. And the sisters have very much asked us to make sure that we are spreading the assets around the globe with a particular emphasis at looking at emerging countries from the standpoint that the need for energy creation is there. And rather than moving towards coal and other very dirty energy sources, why not jump straight to clean energy sources in those emerging market countries? Also been involved here recently, so although we started out slow and in a very simplistic manner with a lot of solar and wind, more recently have been getting involved in clean energy venture capital, a lot of work with electric vehicle charging, a group that we work with that's mapping flood risk from rising oceans, groups involved in ride-sharing programs and other tools to maximize efficiency and security of renewable energy. And although these results are encouraging, we realize that there's a lot more to do and a lot of money on the sidelines that from our standpoint, we think should jump into this area. With that intersection of do the right thing and make double-digit type returns, there's lots and lots of opportunities here and a wonderful way to get involved to address climate change, specifically as it relates to the Pope's call with Laudato Si. The third way that we address our third pillar from our standpoint, from a comprehensive socially responsible investing side of things, is to make sure we're voting all proxies. And this is an area that's changed very significantly over the years. Many of us have been involved back in the day where if you could get double digits, you congratulated yourselves and said, great work. These day and age, it's not uncommon to get 20, 30, 40%, even majority of votes on environmental and social shareholder proposals. And this chart just kind of shows the history of votes from an environmental and social proposal perspective, such that now over 25% of the votes cast on these issues are voted for the proposal in that regards. And so wonderful, wonderful work as more of the mutual funds and other organizations are starting to become much more aware of this issue. So much so that here this week, proposed SEC has changed, proposed a change to Rule 14A8 that you might hear about. It threatens to decrease corporate accountability and diminish shareholder voices by increasing the number of shares required to file proposals, increasing the thresholds necessary for resubmission, and restricting access to outside advice. And so if there ever was an indication that we are doing the right thing and we are getting actions done, it's when then the lobbyists try to change the rules on you. And so I think from our perspective, something that indicates that if you're not voting your proxies, in essence, you're working against those groups out there, such as Mercy Investment Services, other religious congregations, ICCR, and other groups that are working to affect the change. The last pillar from what we work on regards shareholder engagement. This is physically going out and knocking on corporations' doors and trying to create change to try to promote good corporate practices for social and economic justice, a sustainable earth, and the common good. We don't do this alone, as we'll talk about here in a moment. Highly collaborative in nature in terms of the groups that we're working with. We file shareholder resolutions, we engage companies, we educate companies on issues of concern, and vote proxies naturally should that resolution go to vote in a variety of issues. But all these issues are issues that largely most of the people on this call, I'm assuming, are very interested in: human trafficking, human rights, fair treatment of workers, violence prevention, including work with guns, immigration, water access, global climate change, extractives, access to healthcare, and sustainable food supply. From a shareholder engagement perspective, we engage about 150 companies a year. We cover more than 200 engagements. So some of the companies we're engaging on multiple issues. Again, the article on CIIC's website references work that we have done in terms of being a leader with the investors for opioid accountability, work with the utility companies in terms of moving away from coal, work with the hotel chains, airlines, and trucking companies against human trafficking, our work with Dick's Sporting Goods to get them to stop selling semi-automatic weapons and increase the age for selling guns, and other water-related engagements. From our standpoint, that's just a piece. Unfortunately, we're limited in terms of word count, in terms of how much we could put out there, but lots and lots of other stories. Highly involved in a group called Climate Action 100, which is a group of investor-led initiative of over 300 investors with over $30 trillion in assets that are really trying to make sure the companies are working on the action related to the Paris Agreement. Doing a lot of work on chemical footprint as it relates to chemicals and health risks. A lot of work on plastics, the use, reuse, and recycling. And then also working on a lot of socioeconomic concerns, private prison financing, firearm companies, and lending practices of banks, and different things along that line. Once again, would welcome you to visit mercyinvestmentservices.org for much more detail than we can go into such a short amount of time this morning. And then lastly, again, as we talked about earlier, voting all of our proxies at our annual meeting. As I mentioned before, back in 2017, we started creating what we call our accountability reports. They talk a little bit about investment performance, but also more specifically about all the wonderful work that is being done in these areas. that we've talked about today from a shareholder engagement, impact investing side of things. So I welcome you to visit those sites to learn more. And then wanted to talk just quickly from a collaboration perspective. The Mercies have been doing shareholder engagement back not all the way to apartheid, but very close. I've been working on impact investing through the concessionary side for 20 some odd years. And from a market rate side here very briefly in the last 5. But as we've gone through this process, quickly realized the importance of not going it alone. There's wonderful, wonderful resources out there, groups you can work with, joining the folks at CIIC, great expertise in terms of individuals who can help you get started if you're not started, or get over a hurdle if you're still working there. Wonderful organizations that like series that helps you leverage assets. That your what might be viewed as a very small amount of assets ultimately can be merged with other groups and don't have to be the biggest guy on the block to have great effect in this work. It's just as important about who you are working with, who you're sharing with, who you are learning with, and who you're collaborating with. But you can leverage the size of trillions of dollars of assets, such that a small investment in an impact fund coupled with others, also often, as has happened with the Sisters of Mercy, have been kind of the first investor into some of these projects. And what we find is that others follow. So don't be afraid to ask for help as you go through this process. As I mentioned, lots and lots of groups that you could work with. Ultimately, that kind of gets to the concept of we'd like to talk a little bit about today, which is just the importance of doing something. For many of us on this call, investments is either the largest or the second largest asset on our balance sheets, so to speak, whether it be property or whether it be investments. And from our standpoint, historically, investments is not viewed as a avenue to affect the mission of the organization. I kind of equate it to the following: is that if you have 20 individuals in your organization and only one of them was doing the mission of the organization, you'd quickly ask yourself, well what's going on here? If the other 19 people were just trying to continue to get more people to come into the organization, and only one was out there actually actively doing the work of the organization, everybody would look at themselves and say, well, wait a minute. And to a certain extent, that's kind of what goes on with investments and is kind of understood and accepted. If you think about that 1/20th or that 5%, generally speaking, that's the spending rate, plus or minus, for most organizations. And so as the amount that you have, if you're only taking the spending off of that investments, or taking the spending off of that investments and using that to affect the mission of your organization, you're missing out on that other 95%. And from our perspective, that's the idea here, which is how do you find ways to take those other 19 individuals in your organization, or that other 95% of the investments, and put those to work? All 19 don't have to be as capable as others. They don't have to be all doing the same thing. There is no one right way to do this from an impact perspective. There are many different accepted ways to approach this, and there's many different groups. What we invite folks to do is to identify what is that passion, what is that issue that you really are interested in, and then look at the available options of which to do this. Is it immigration? Is it refugees? Is it climate? Is it human rights and human trafficking? For each one of these issues, you can find options within your investment portfolio to address this. And rather only than using the spending off of those investments and making grants to those organizations that are addressing that issue, why not, while the investments are sitting there in your investment portfolio, continue to let them work for the mission of the organization? And that's really, truly the message that I would leave with everyone today. We live in a world filled with poverty, violence, racism, denial of human rights. What we're doing to the earth is just unconscionable. We continue to oppress women, abuse children, and mistreat immigrants across the world. There are so many needs. And from our perspective, it just seems not right that we are only using a portion of our investments to address those issues. Why not unlock the power of the total assets of an organization, not only the human assets, the property assets, but also the investment assets to address this issue. So we invite each of you to think about how you can put your portfolio to work, ask around, talk with folks, start small. From our standpoint, we're always fearful that as we go out and talk, people become deer in headlights, that they look and say, well, the Mercies have done a lot. I will never be able to do all that. But from our standpoint, get employee number 2 to be working on it. And before you know it, employee number 3 and employee number 4. And of that 100% of the portfolio, instead of just having 5% of employees working to address the mission, next thing you know, you have more and more of your portfolio working in that regard. So join CIIC, join other organizations, and look for ways that you can put your investments into action. So with that, I'll turn it back to Jessica.
Thank you, Brian. Thank you for your story, and thank you for being a real leader in this market. It's very inspirational to hear what you've done in such a short amount of time. I do have a question from one of our members on the call today. The question was asked, Brian, how do you identify private equity projects, and how do you measure the impact?
Yes, so I would say identification is always very difficult in that everyone has different internal processes. We recognize that some groups are highly dependent upon consultants for their work. Some groups have more expertise in-house in organizations. I think the main piece is to really force the question on the table, whether it be in-house, whether it be with consultants, whether it be with such, to stress the importance of doing this type of work. Once you have the recognition that this is important, and so if you're working with a consultant and the consultants recognize it is important, right now it's probably the easiest it's ever been to find good investment options. And those investment options could be a completely outsourced product, like a fund of funds or something along that lines. It could be direct investments. You could look at it and say, Brian, I don't have the availability to take 10-year risk on these, but I can take 5-year risk. And so as a result, that you can be shorter duration investments on the private equity side or longer duration investments on the investment side. Probably something you couldn't say 10 years ago in this regard. So lots and lots of options. One of the first steps an organization needs to do, though, is to figure out what is it that's most important to them. So when we started the program, we said to the sisters, would you like us to concentrate on the market rate side, on environmental issues, on education issues, on healthcare issues, on human rights issues? And the sisters came back very strongly that they wanted us to concentrate on the environmental aspect. And so as a result, really threw ourselves into the process of trying to better understand everything from what's going on with solar and wind, but also trying to expand our interest into things like sustainable agriculture and the such. For new folks going in, I would say is start. Don't try to get too exotic. There are groups out there, whether it be the consultant community, now it has this on the radar, but also talk around. I think folks, for example, in terms of talking with some folks in CIIC, through the course of about 5 questions, I can narrow down for an individual as to what type of product they're looking for, and maybe a few names that they might want to go talk to. And ultimately, like any investment manager, the importance here is to talk to the manager, because unfortunately there is a lot of organizations out there that are just out there to sell product, whether it be impact washing or greenwashing or whatever you want to call it. And you really just need to sit down with them and have the conversation and ask them questions and see how they think about certain things. This is lots of opportunities, but with opportunities also becomes a little bit more work to make sure that you're in a place that you're comfortable, whether it be on the structuring side, whether it be on the duration side, whether it be what an organization's doing, sort of thing. But I think in these day and ages, it's probably never been easier to address impact through the private equity side. But again, don't feel like you have to try to do it yourself. Talk with other folks, talk with the consultant community or your consultant, and importantly, just put your foot down with them and say, this is important to us and we believe this is important to do. Don't try to bite off the whole apple at once. Put a little bit of money to work and learn and experience, and next thing you know, that part will increase. And particularly in this day and age where the markets have gotten a little bit rich, and the equity market has been very strong, it's a nice place for some diversification of your returns away from what else is going on in the broad-based stock and bond market.
Thanks, Brian. Great. We do have a few more questions. Do you use any mutual funds for impact investing, or do you always go through the route of private equity?
So from a mutual fund perspective, we do use commingled accounts, whether those be mutual funds or limited partnership structures or different things along that lines. Generally speaking, in the US and the developed world, on the equity side, we try to hold individual stock accounts because of all the work we do with the shareholder engagement perspective. So the fact that we own the shares gives us more leverage when we sit down with the company to talk to them about what they're doing. It's not to say that we don't have some commingled vehicles and mutual funds and different things. Seems to be a little bit more in the emerging market space and the non-US space, simply from a preferential perspective. And we recognize that at some point in times that hinders efficiency and different things along that lines. I would say we probably on the bond side are much more likely to use mutual funds because we don't have that stock security holdings perspective that we want to leverage our holdings so that when we sit down with companies, we can show them that we own as many shares as we do.
Great. So Brian, how do you balance between high return oriented and impact focused investments?
Yeah, I think, there's a perception out there that you have to choose one or the other. I think there's more and more opportunities where those two intersect, and you just have to look for those. And so I think the day of the assumption that you had to forego returns in order to create impact is no longer true. It is potentially for some areas. You look at things in terms of, immediately I think of towards immigration, and nothing immediately comes to mind as how you can do a market rate project related to immigration, but I'm sure there's something out there in that regards. There's also areas where you just look at and say, I think the best way to do a certain work is concessionary. So you look at it and say, okay, from our perspective, we historically spend more of our capital on low-income housing and microfinance in the concessionary space. Just from the standpoint, the difference between the concessionary returns and a market rate return feels like we're gouging those most in need. And so as a result, we will make decisions as to what areas that we're concentrating on, what sort of priorities that we're concentrating on, as to do we view that as a concessionary sort of strategy or a market rate strategy. But increasingly, there's more and more market rate strategies out there that allow you not to have to make that differentiation.
I love, Brian, is you're always very thoughtful about your program and how you approach things, and you really always are taking a very Catholic perspective about things. I really appreciate that about you. Another question. So if you could think of one or two of the greatest challenges in moving into private impact investments, what do you think they would be? And perhaps think about it in terms of the Mercy Investment Services organization.
Yep, I think originally out of the gate, it's coming to the expectation that you can put illiquidity into your portfolio, whether it be your investment committees or your leadership that you're talking to about starting this. Many of us, and so we represent 2,500 sisters. Demographically, that is a chart that you don't like to look at in terms of what the numbers are expected to be going forward. And so immediately the feeling is, well, wait a minute, can we take that illiquidity risk? We'd love to do this, but as many of these organizations have been created, these groups of women and male or missionaries, different groups like that, have been very bold and adventuresome in their past in terms of willingness to take risk. And as those organizations, from a demographics perspective, continue to age, they bring in more lay folks who really feel like it's their job almost to kind of protect those individuals from a risk perspective. And so they start asking a lot of questions regarding, can we take the ability to cash out of this in the next 5 years, in the next 10 years? And so really, from our perspective, one of our biggest challenges has been the sisters love these types of projects. It's how much can you put into the portfolio? How much risk can we take that we're not going to need this money for the next 10 years? And so as a result, it's start small. It's don't necessarily try to get up to the number you think you ultimately want to get at. But if you get a little bit of the portfolio and people realize what a wonderful stories are, and you can measure the impact, and you can demonstrate the number of solar panels that have been created as part of this project, or the number of gigawatts of clean energy, the number of electricity that's been avoided, different things along that lines, it gets the folks more and more comfortable. And through the passage of time, and unfortunately, as demographics continue to change, you have a better sense as to your finances to determine how much illiquidity you could do, but at least get over that first hurdle. And I think that was the hardest part about the project, was in many of these cases saying, I can't cash out tomorrow. I can't move you to cash tomorrow. Let's make sure we're comfortable with that and at least get started somewhere.
Great answer. I think a lot of people would definitely agree with that approach. So we're going to take one last question just in the interest of time, but that doesn't mean we're done answering your questions. I would encourage you to keep sending them out. We'll make sure Brian gets them and can connect you directly if you'd like, but lots of information to share from Brian. So we don't want to make this ultimately be the last question, but right now it is. Brian, can you talk more about whether you team up with co-investors in conducting due diligence and negotiating investment terms, including impact? If so, how do you find these partners and how do you work together? What has been your experience?
Yep. From the co-investment, largely we find somebody who's bigger and has more resources than us, and we try to ride their coattails, from the standpoint. And some of the CIIC members or groups that have that kind of capacity to leverage. And really from their standpoint, they're looking for ways that they can leverage their resources and spread that ability and share that ability. So there's a mutuality of benefit for organizations. you don't have to be the big guy negotiating all the terms. If you can find someone similar to you who's already doing that, in a lot of cases, they're willing to also do that on your behalf or do that on your behalf for a very reasonable fee. And so the concept there being is that we do not have the internal resources to do co-invest ourselves. We believe in the merits of co-invest from the standpoint of decreased fees and always being mindful of the fees perspective there. You get a very clear understanding of what they're trying to accomplish, and in a lot of cases, it gets you very specific to a region or an area that you're trying to approach. And so we've done, most of our co-invests have been in emerging market countries where, you know, from our standpoint, we can get very clear view into what's trying to be accomplished. And so from our standpoint, I would say is you don't, on any of these sort of projects, whether it be shareholder engagement, whether it be impact investing, whether it be you know, community investing, you don't have to lead. It's very okay, even in the shareholder engagement perspective of the 150 companies we're engaging, we're probably only leading on a third or a little more than a third of those organizations. It's very okay to join other people and walk with them, to learn from them and to leverage their expertise. And somewhere down the line, you're going to be in a position to return the favor and scratch their back in that regards.
Fantastic. Thank you so much, Brian. I really appreciate, we all appreciate you sharing your time and your insight with us. It's very valuable. So I'd like to conclude this call with just a few brief update messages. Also remind everyone that we are recording this. This is going to be placed on our website within the next week. So if you had to jump off early, or if you want to share this with a friend in the community, please do. And Brian, do you mind sharing the next slide if you're still? Thank you. You know, I referenced our Catholic Impact Investment Pledge at the beginning of the call. So this pledge, we're very excited about, you know, the progress we've made in this last year and reaching on launching this pledge. It's comprised of two sections, a principle section and a commitment section. The pledge principles outline why CIIC believes impact investment is an important element of an Catholic investor's portfolio. The pledge commitment is explicit next steps in what any signatory, when they're signing the pledge, what they're agreeing to pursue. You can find our pledge and all its specificity on our website, www.catholicimpact.org, or please email us at info@catholicimpact.org. We'd be happy to send it to you directly or address any questions. I really encourage anyone to learn more about the pledge and motivate your communities and your institutions to become one of our pledge partners. Everyone involved in CIIC is so happy to be a resource as you start your own journey. Finally, I'm excited to announce that, I'm excited to announce that CIIC is partnering with Loyola University in Chicago to host a Catholic Impact Investment Summit. That's going to be hosted on September 16th and September 17th next year in Chicago, Illinois. We are now in the process of organizing a committee to bring together a diverse group of ideas and people and really collaborate to think about what content is important that we want to really highlight at this summit. So excited about it. If you have any thoughts, you have ideas that you'd like to share or add to, or you'd like to be involved in attending the summit, please write us. Again, that's info@catholicimpact.org. We'd be excited to hear about you and hear your ideas, and hopefully see you in Chicago. But for now, that's going to conclude our webinar. Again, I can't thank you enough for spending your time with us, and I can't thank you enough, Brian, for sharing your story. Again, it really was. You really have been a leader in this market, and we appreciate you sharing this with our community.